Hosted in conjunction with Chris Media, the CEO interview series allows investors to hear directly from the CEOs leading the companies featured on Wholesale Investor. Enjoy the interview and reach out via the details in the description.
Hi and welcome to another Crisp TV interview. Today I'm joined by Peter Baker, CEO of Unhedged. Thank you for joining me, Peter.
Very welcome.
Peter, look, thank you. Look, we're just going to get started with a high level of Unhedged here. Okay?
Sure.
So if you don't mind, just for the audience watching, what is Unhedged? What's the value proposition you bring to the market?
So Unhedged is an investment platform which brings algorithmic trading and basically hedge fund-like strategies to the everyday investor. So at the moment we have a wholesale investor fund live, and we're converting it now to a retail investor platform.
Okay, so on that, what did you identify in the market? Because it's a market with many competitors, right? So what did you identify as a key problem in the market, and what motivated you to work on this as a solution?
Well, it came out of my own investments. I had an exit before, and I gained quite a bit of capital, and I gave that capital to fund managers. And they professionally halved my money in 2003. And then I thought, okay, I have to do it myself. So when we started Unhedged, we really started to look at, okay, what can we do different in this industry? So first, the industry has little alignment between the performance of a fund manager and the performance of your funds. Yeah? So they always charge you 1% or 0.5% or 2%. That's unfair. I think, and we think, is that when we make more money for you, you pay a bit more. But when we make a loss for you, you don't pay. You don't pay any success fee, just a small base fee, which aligns us better with our clients. That's a very big difference. There's only one fund in Australia that has any form of success fee for retail investors. And I think the whole industry should move to it. Mm-hmm. So that's, I think, one of the main motivations to start this company. Our internal mission is, we don't say that out loud, but is to create equal wealth opportunities for everyone. Mm-hmm. Wholesale investors like myself, we can negotiate fees. Retail investors cannot negotiate fees. Mm. Wholesale investors can invest in hedge funds. Retail cannot invest in the hedge funds. So not only are the rules against retail investors, they are basically the cards are stacked against them. Mm. And we want to open that up.
Absolutely. So what I want to go into is perhaps the technology associated with this mission, right? So yeah. I saw on your material that Unhedged talks about known factors that are enhanced. Yeah. Okay, so can you talk to us a bit more about these known factors and the technology that enhances it and how it enhances it?
Yeah, okay. So let's first talk about the factor, right? A factor is basically an anomaly in the market that explains some excessive return, which you normally don't have, right? Mm-hmm. And for example, a very known factor is momentum. And momentum is basically stuff that goes up will go up for longer. Mm-hmm. Yeah? And on its own is that's a good factor. Yeah? So for example, Apple went up a lot and it keeps on going up. However, then you are exposed to the full market risk. Mm-hmm. And what we do then is we put another factor on top of it, which is usually volatility based, that basically says, should we enhance our exposure or should we decrease our exposure? Mm-hmm. And what we do then is basically when the volatility increases, we tighten the stop loss. Mm-hmm. And then once the market starts falling through the floor, we just sell everything. Mm-hmm. And then we have also metrics that say when the market is too oversold. Mm-hmm. And then we step in again. And what it means in the graph is that the big drawdowns are taken out of the graph, and then you go up again. It's basically, I would say, it's winning by losing less. Mm-hmm. So another factor is that correlated assets are the correlation of assets is not static. No? So some assets start to correlate together at some points, and some assets don't. If you look at static portfolios of robos, they have an assumption about the correlation and that the correlation is static. But we know it's not static. So one of our algorithms continuously looks at the correlation between asset classes and ETFs. And then it says, okay, these things are going to cluster more now, so I have to treat them as a cluster. So that's another one. The third algorithm is based around the concept that you have in the metal markets, you have industrial and hedging metals. The industrial metals, they start to behave at one point in the same way when the economy starts to strengthen. And often it's a leading indicator for more building activity, for more industrial activity. And that's often a precursor of the market going up or stabilizing. So that's another one we're using. So how we enhance it in general is by taking alternative data to tell us whether we should be in or out the market. And these three algorithms have three different mechanisms. So they might be too early or too late. But if you combine them, it becomes a pretty smooth equity curve. For example, momentum, you have the very famous momentum crashes. Momentum can have a drawdown of 20%, which is a lot better than a market which can do 40%. But if I put momentum together with sector rotation, together with industry, then the maximum drawdown will be 9%. And 9% is over the past 11 years. So that means that in the end, by combining them, you don't have that much stress. You never go that much in the red.
Understood. Can you talk to us, I mean, that gives us a great insight into the conceptual technology behind the business. Can you talk to us about the team who brought this together and basically what the combination of minds that led to this technology and this venture? Can you talk to us about the assets and skills they bring to the business?
Yeah, I mean, the team we assembled is really super impressive. And not only the team, the executive team, but also the team of advisors.
Yes.
It's really amazing. But let's start with the execs. We have Saskia, who is our COO and co-founder, and she used to do the go-to-market for Volt Bank. And before that, she was at several consultants, and she did also an INSEAD MBA. A very, very intelligent and super organized person, and really rocking the boat really hard. Then we have Glenn, is our CTO. He has a PhD in astrophysics, and he worked for a hedge fund, and he was for a long time involved in fundamental research. This man can write code by himself so fast, it's immediate, but he can also, and that's very special, lead a tech team. So we have some really, really good engineers who together are building code and at a speed you won't believe. And good code. I mean, we do external reviews of cyber risk. We let people trying to hack it. Nobody went through yet. So I hope that we'll keep that, right? The rest of the team, we have a very strong operations team. So there's Saskia and there's Will, and Will is now head of operations, and he used to be the COO of a neobank in Barcelona. And so that bank was taken over by another party, and then he came back to Australia. But Saskia and Will together, they're like a super team in operations. And then we have, of course, the marketing team, which is consists of two people, both called Jeremy. They they are just these uber experimenters, right? And this space, because we are carving out, we're not building a new company only. We're actually building a new category. It's a category within the category. And so we have to experiment a lot with the messaging. What does resonate? And after a few months of experimenting, they acquired users at a very low cost. So $5, which is really, really low. And we have 8,000 people on the waiting list. So,
amazing.
I mean, really, really good. I mean, and that's I think, a question I get sometimes, and I will preempt it now, is what if the algorithms don't work? What if they start to fail? And that's actually the most important part of what we're doing. We're also having a pretty strong quant team. So Glenn and Hannes and myself and Patrick, we are building new algorithms and improving them. Because in the end, it's not about if the algorithms will fail, it's when they will fail and how do we monitoring them and how can we replace them quickly enough. And that's basically the key, right? So we have a super strong quant team.
Amazing.
And the quant team, in the end, that's why we also have other businesses we can go to. We can, at one point, become a provider of certain quant capacity for other businesses that want to improve their in and exit trading.
Understood. On that point, regarding the speaking from this perspective of an investor looking to invest into, have you guys manage their funds? I mean, who is your target clientele? Let's talk very abstract here at this point.
Yeah.
So, what benefit are they trying to derive? Okay, when they see Unhedged, what do they get excited about? What have you seen them get excited about? What do you see them? What benefit do you see them derive that they appreciate the most?
Yeah, I think what the general feedback what we get from wholesale and retail investors is the general consensus is yes, it makes sense. It makes sense that we align the incentives, but it makes sense that most of the volume on the stock exchange is now traded by algorithms. Why not use them, right? Why not use them for our own? And that's I think a very important part of it.
So they see an edge that you're providing.
Yeah, they see an edge.
At least leveling the playing field. At least. But even if we would fail and do as good as a normal robo, they still have to pay us. Yes. Yes.
Yeah. So there's this alignment which I think is very important. The second thing is what we see is that wholesale investors attract other wholesale investors. Last month we had a really good month. We did 7.17% on one of our algorithms in 1 month. So then people say, hey, dude, you have to invest here because the market went down. So I think in the end, performance will be the key.
Yes.
Especially for wholesale investors. But I think for retail investors, it's important that we have a very low minimum, $100. So you can start like at the level of raise. I mean, StockSpot's minimum is I think $3,000 or $2,000. So you already have to save some to get into the door. And Spaceship has an implicit $5,000 when you really start to be able to do things. The low minimum, I think, is important, and also the fact that withdraw and fund your account is so easy. I mean, it's really 2 buttons. No stress. You just I want to withdraw this, and a few days later, it's on your account. But I think what resonates most is that we basically bring investment to a new playing field, to the new age of AI and machine learning, and the next gen robo, basically.
Yeah, absolutely. I'm going to ask you this question for prospective investors into the actual venture.
Yeah, okay, as investors, as shareholders,
Talk to us about the roadmap for Unhedged over the next 6 to 12 months. What milestones should they anticipate and I guess be excited about as well?
Yeah. Well, we hope to be through the wait list at the end of Jan, and then we open it up for the broader public. By that point, we probably have about 10 mil under management, and we strive to get somewhere between 15 and 100 in June. So that's one of our milestones. Mostly those funds will come from bigger investors who we know want to invest in the fund. But I think the most exciting things we're going to develop is some what I call hygiene. So for example, regular investments that you can invest basically the day after your salary comes. Automatically, you don't have to do it again. But that's almost hygiene. The most exciting part I'm really, really excited about is to take this concept and create this similar app on a similar technology, but then for crypto. And what we're doing there is that although crypto is very open and accessible, you still have to think about it. You have to know wallets, and you have to know things, how exchanges work, and that you only can go from this coin to this coin through another coin. And for most people, too hard. And especially for the generation, let's say, 40 and over.
Sure.
Yeah? So what we want to do is basically make a very simple robo-advisor, same concept through algorithms that you just direct debit your money into, and we do the work.
Sure.
And you can adjust your exposure by giving it a little bit more risk or less risk, but for the rest it will be uber simple. So that's very, very important for us. The second pillar we want to develop in 23, but in the next 6 months we will be doing the work, is to go abroad. Although we're started in Australia, it just happens to be, right? We want to go to Singapore, London, we want to open up in countries like Mexico where they don't have access that much to robos. Steak went to Brazil. Maybe we should look at Brazil as well, because there seems to be a big market. So we really want to nail down like to which countries we are going in 23. And the third pillar is to enable the B2B2C channel. So there's several fund managers and several financial advisors that, to say it impolitely, got nailed really hard by the Haynes Commission, right? So they basically cannot live off their trailing commissions, and they have to find a different business model. So what we can give them is a different business model, either through a feeder fund, so they have a fund and they feed into our fund, or through a 100% white labeled solution. And the white labeled will be only the white labeling of the front end, so they don't have to worry about the back end. We keep the back end as our own, but they will get a different interface. They have their own app in the app stores, and then we can say, okay, you have your own model of earning money, and everything goes through us. I mean, it's a bit of a competition to $6.
Understood. Well, just for those who are watching, I think in summary, we can talk about the great technology involved, the great team involved, and the expansionary milestones on the horizon, which are always exciting for an investor.
Yep.
So for those who are interested in talking to a representative from Unhedged or Peter himself, we will have the details on the side of the screen and in the description of the video. And Peter, thank you very much for joining me today.
Yeah, very much. It's great conversation.
Thank you, Peter.